Friends of Grey Rhino, very good to be seeing you once again.
So what has happened mainly in the first quarter 2021? 3 months. Okay, I think the main thing is this one. Okay, so the rising Treasury yield. Okay, let me try to share with you what this is. Okay, first we have official interest rates. Official interest rate is what's set by the central bank. Okay, and till today the rates has not changed. It's still stuck at the basement of about 0%, like the US interest rates. However, there's also the market interest rates, which builds in an expectation of the future. And that has risen during the year. If you look at it, at a trough last year, August, where the 10-year US Treasuries is at 0.5% interest rates or yield per year. Okay, come at the start of the year, it went up to 0.9%. And then now we are about 1.6, 1.7, about there. Okay, so it has definitely climbed a lot. If you look at from the trough, we have climbed about 3 times, which means market interest rate has risen. And what's the reason of that? And what's the impact of that? Okay, the reason of that, firstly, is the vaccination. Okay, as we know, last year around November, right, we start to have the first vaccine available, and shortly after that, a few others that are made available. And hence, there's an expectation with the vaccination, this COVID should pass us pretty soon. And this is based on the statistics. Okay, so the expectation is by about middle of the year, about June, July, August, we should reach, this is in US, a stage of herd immunity, which is the majority of the people would have received the vaccine. Okay, and such that there could be gradual reopening of the economy. And then by early 2022, you should have almost a full vaccination. Okay, so today for US is still quite on track, although there have been a situation of rising cases, especially in India. Okay, but so far it's been proven that at least it has been shown that the vaccine has been effective. Okay, so I think we are waiting to see. Okay, so secondly, of course, with the vaccine, then economy should be reopening. Yeah, and then to add to that, the president-elect Joe Biden, he's wanting to do it big. Yeah, so he's been ever since being a president, he's been advocating firstly 1.9 trillion fiscal stimulus, and following after that, as you see, once in a generation kind of 2 trillion infrastructure plan pending to be approved. Yeah, so he's wanting to do big fiscal policies, which will add further stimulants to the economy. Yeah, which is why with these two, there's an expectation that growth is going to pick up, and then inflation is going to pick up, which is why the market has priced in that pick up in inflation, and interest rate has risen ahead of the rise of inflation. And that has been the main story for the economy, or maybe not so much the economy yet, but more of for the market, because the market always look ahead of the economy. Okay, so it seems like we are at the start of an economic recovery. But later on at the end, I will share with you what's so different about this economic recovery versus the previous one. Okay, so that's what has happened in first quarter 2021, and later I will share what is the continuous impact of this. Okay, and because of the increase in rates, well, there has been a pressure, especially on bonds. Yeah, especially the developed country bonds. If you look at the US 30 years Treasuries, it's down about 20%. Yeah, that's a lot, for a supposedly safe class of assets. So I'd like to share with you this thing. So, I did this TV channel under Hello Singapore in November 2020. Yeah, so I was sharing what, for people who really want to have lower volatility assets, what could they buy today? Because interest rate was so low at the time, less than 1%. What could they invest in? So I was sharing that, if somebody who wants something like that, China government bonds might be a good place. I would really shun the US, the European government bonds because of the ultra low interest rates. And true enough, fast forward 3 months later, China government bonds is up about 1.8%. Okay, while the equivalent in US is down about 5.3%. So that's why I call it a wise diversification versus ignorant diversification. Ignorant diversification means I don't know what to do. So I just put, well, should I invest in A or B? But because I don't know, I'll buy both. That I call it ignorant diversification, which is sometimes called lazy diversification. Out of ignorance, out of I don't know, I just choose to buy both. Wise diversification comes from knowing I don't know everything, so I need to diversify. But yet, within the asset class, I want to make intelligent decision what to diversify in. And in this choice, I think it kind of illustrates that having wise diversification, and hence we chose with hindsight, these right bonds instead of the US government bonds. Okay, and that's what we had in your portfolio as well. So the difference is about 7.1%, which is quite a lot in just 3 months.
If you'd like to be listening regularly to the Grey Rhino YouTube to gain more financial knowledge and also investment wisdom, do subscribe below to the Grey Rhino YouTube channel and remember to turn on your notification.